Hello and welcome. My name is Joe O'Mara. I'm the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Fred Browne. Fred is the CEO with Aergo Capital. He's joining us for the purposes of our Aviation Leaders Report. I should say we're recording this in early January. Fred, thanks again for joining us. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about Aergo Capital?
Hi, Joe, and thanks for having me on your program. Just to give you a brief summary of Aergo's history since 1999, when the company was founded. Basically, it was founded by myself and an entrepreneur called Dennis O'Brien, based out of Dublin. So essentially, we've three phases over that last 22 years. The first being 1999, 2014. We basically were a very heavy trading mentality type company. We bought over 200 aircraft, including actually buying Sapphire, which at the time was Africa's largest lessor at the time. Essentially, we're doing 737 Classics, MD-80s. And obviously, look, those airplanes were aging. So towards the end of 2010, 11, we decided to sell down most of these aircraft. So by 2014, we went from 110 planes at our peak around the 2009 period down to around, believe it or not, 11 planes with only a fleet value of 30 million by the time we got to 2014, which essentially brought us to our next phase, which was the 2014 to 2019 period. So enter Carval and their head of transportation, who very good contact of mine, Justin Bradburn. And we essentially worked out that obviously at the relatively low level of aircraft we're at, we need to transition to newer mainstream aircraft, which needed lots of capital. Carval were an excellent fit. Dennis O'Brien exited, and Carval took 90%, and I took a 10% stake in the enterprise going forward. So with the capital and the team, we rapidly built up basically a mainly midlife fleet of approximately 80 aircraft by the time we entered 2017. Now, at that point in time, we felt, the market, lots of blue skies, everyone was talking about super cycles and all that kind of stuff. So we kind of thought, well, look, it's time to sell down some of these aircraft. So we basically took a very deliberate strategy to sell down while the sun was shining. So we did that via an ABS, and secondly, just essentially trading with other lessors in the market. So that brought us essentially into the third phase of Aergo's life, which is 2019 to present. So because of that sell down I just mentioned, we entered the pandemic with only 20 owned aircraft, down from 80. So it was a huge sell down, and obviously we looked pretty good because going into the pandemic we were very slim. A lot of our competitors, I think had to deal with many more COVID related restructurings and things than we did. So in fact, COVID ended up being a great opportunity for us to expand Aergo in what was rapidly becoming a very distressed aviation market. So we did a range of deals, emphasizing our ability to trade across, all aircraft types in the aviation spectrum. So to give you an example, we did 11 brand new Maxes, which we placed with Lion and Lynx in Canada. We did 2 almost new 787s and an A350 with Singapore Airlines. And then at the other end of the scale, we bought 20x Flybe Q400s, and over the last kind of 18 months we've placed them in various airlines around the world. And then obviously our bread and butter, multiple 737-800s and A320s. And then in addition to another very important development was we set up an asset management business from scratch. So it's a business we kind of always wanted to be in, i.e. managing other people's third-party assets, aircraft assets. Now, not an easy business to get into when the sun's shining, but obviously once the pandemic hit, there was multiple distressed situations, ranging from Norwegian, Avianca, Latam, etc. So between Aergo's organic origination of 89 aircraft, which we've done in the last 2.5 years, you probably read that we recently acquired Sarap, the platform. So at present, we've grown that essentially from a standing start to 177 aircraft, valued at 4.7 billion, literally from scratch in the last 3 years. That would probably put us in, roughly speaking, in the top 5 asset managers in the world by aircraft numbers. And then in addition to that, of course, we have our own aircraft fleet, which, as I say, went from 20 airplanes at the beginning of the pandemic to nearly 130 aircraft today, either owned or under LOI. So essentially, we've gone from 20 airplanes to over 300 airplanes since the start of the pandemic, which is a massive amount of growth. And the combined fleet is valued at just under 7 billion. So that again, by aircraft numbers and value, etc., probably puts us into the top 15 in the world. So I think it's been a hell of an achievement over the last 3 years to do that. And obviously we're looking forward to the next 5 years to grow it even further. So that's basically where we are.
No, and a great story and a really interesting one, Fred, and gives you now a perspective over a large portion of the market, given the size of that fleet. Can you talk to us how you've seen kind of the recovery in air travel evolve, from your customer base over the course of last year? And I'm particularly interested as to what nuances you saw across different geographies. Look,
I mean, I think certainly the two kind of shining spots, for want of a better word, is like North America, Canada. We've got quite a bit of business over there. It's performing well, lots of opportunities. We've got anything range from American to Lynx to Air Transat, etc. in our portfolio. So I think North America is doing pretty well. The other market that we've been pretty heavily focused on is the Middle East. We've done in fact, the acquisition of Sarap and some existing stuff. Like we actually grew from 0 with Emirates, for example, to 14 aircraft, to A380s and 777s over the last 18 months. So again, we see some very nice opportunities in that part of the world. We've got Qatar Airways, etc. So I think Middle East and North America, in my view, would be the leading lights. I think lagging behind probably would be Europe, Latin America, and Asia. I mean, look, I think Asia is largely driven by the Chinese market. I think obviously the fact that was literally shut for the last 2 years has had a big impact, not only on domestic Chinese airlines, but clearly the amount of people that travel from China into the region literally shut that off to zero. And surrounding countries such as Thailand, Vietnam, Indonesia, these sort of countries that would have depended on Chinese traffic, it kind of literally down to a trickle. So I think with China now opening, it's planned, I think it's the 8th of January. In fact, they're saying it's going to open again internationally. So I think that's going to have a big impact. And I think it should be the recovery of the Asian market over the next kind of 18 months, which I think is very welcome to not only to lessors, but to everybody in that region. So, and then, as I say, I think Europe is struggling a bit. I mean, we all know that, on the verge of recession in various countries. I mean, Latin America, again, we've got quite a bit down there, but they've gone through the ringer between LATAM, Avianca, a lot of airlines, I think, struggling down there. But again, hopefully, that'll change over the next couple of years. So that's really, as I say, my round the world tuppence halfpenny, for want of a better word.
And maybe then if we move to having a look at the macroeconomic and kind of geopolitical environment then, Fred, we're in a time of huge uncertainty. So I guess if you think of, obviously the Russian challenge that's thrown out with an outsized impact on aviation, and then we have challenges across interest rates, inflation, oil prices, FX. Can you talk to us a little about how those macro challenges are impacting on the business currently and in your planning?
Yeah, look, I mean, whether it's aviation or any other business, I mean, look, interest rates and inflation have come back like with a vengeance. I mean, look, we went through, I don't know, kind of a golden period of like almost zero interest rates and benign inflation. So obviously it's come as a bit of a shock to everyone. My God, look, interest rates have, shot up. I mean, spiked, inflation. I think the inflation certainly in the European market, I mean, is a lot of it's around the energy crisis, coming out of the Russia-Ukraine situation. So, I probably see a situation where interest rates, yeah, they're around 4.5 to 5 today, but I'd probably see over the next couple of years that'll fall back somewhere around, settle down around 3.5%. And I just think we all need to get used to the fact that it's never going to be, or certainly for the foreseeable future, we're not going back to zero for sure. So people have to kind of sharpen their pencil, adjust their models to take that fact into account. I think certainly oil prices, I mean, as we say, the whole Ukrainian-Russian situation is throwing everything on its head. Look, who knows how that's going to play out, whether it'll go on for years or whether there'll be a settlement at some point in the next year. Who knows? I think that's a big one that nobody kind of really can predict that one. I think, the US dollar, I think, is another factor. I mean, it's been extremely strong. We almost got to parity. In fact, we got below parity with euro at one point fairly recently. It's recovered a little bit, the euro against the dollar, but it's a really important currency, obviously in the aviation business. I mean, everything's priced in dollars. You buy in dollars, you lease in dollars. In particular, like the airlines have to pay in dollars. So, it's not easy if you're in a currency that's and you're kind of a domestic kind of economy, to kind of pay these lease rates and your oil and all this kind of stuff. So the US dollar, I think will play a big part over the coming years as to the health of I think marginal airlines will struggle, in my opinion, if it remains as strong as it is. We kind of touched on going around the world earlier, like GDP. I mean, we kind of see US probably mild. I think Europe probably will have a more deep recession, depending on the country. Asia, I think, obviously with China coming back, which is a big factor, I think, it'll be less than it traditionally was. But I think long term, I think, across the board, 2 to 3% annual growth, which, if you look at the predictions for, how many airplanes we need over the next 25 years, it's not far off. So I think fundamentally, there will be a good demand for aircraft, notwithstanding the kind of the hopefully short-term problems we're having around the world at the moment. So I'd be pretty bullish about, the aviation market. If you look at a kind of a long-term view of it, I think, people will continue to travel. I think GDP will drive that. And I think we've been through such a kind of an uncertain period. I mean, obviously we had COVID, which was very tough. And then all of a sudden we lurch into, an inflationary, high interest rates, Ukrainian. It just seems to be one problem after the next. But I think eventually that will all sort of straighten out and we'll be back on the straight and narrow, I think, in the next 2 or 3 years.
And can I pick up one of the threads you talked about there, Fred, which is around that interest rate environment? And I think we all knew rate hikes were coming, and it was probably the speed at which they came was probably the surprising thing over the course of the back end of 22. Can I ask you how you're seeing that feed into lease rate factors? The logical piece is we'd see an uptick in lease rate factors. There's always been that slight delay from a timing perspective. So just curious as to how you're seeing that correlation evolve.
Well, look, I think it's basically, it takes the time for to kind of kick in. But look, obviously, look, if you've gone from 0 to 4 or 5%, and let's say you were pricing a levered deal at 10%, right? So by definition, you literally have to add on another 5% to get to where you were originally. So I think there's definitely a kind of a, lease rates in theory really have to increase to deal with this. So, but now, in fairness, we haven't really seen that. I think, right across the board. I mean, certainly, I suppose the narrow body A3, the Neos and the Maxes definitely, they were sort of lease rates that were, in the kind of the 280 to 300 maybe a year ago, and I think definitely they're now in the 330 to 350. So I think definitely that market is kind of adjusted upwards. But I think it's going to take a bit of time for the lease rates to increase across the board to reflect the obviously the increased cost of funds.
And on that cost of funds side, Fred, you mentioned that the ABS market is one that you guys have played in before. But the capital markets are obviously very sentiment driven. And we've seen not a lot of activity either on unsecured issuances by the IG rated lessors, and kind of limited activity around the ABS market over the course of 22. Can I get your thoughts on how the capital markets might move going forward in aviation finance?
Well, look, I think the investment grade sort of big kind of companies like AerCap and Air Lease, etc. I mean, I think they'll definitely continue to enjoy access to capital markets and finance their order books and acquire aircraft and lease. Now, I think certainly the ABS market is as good as shut at the moment. On the other hand, look, it's a very interesting market. I think quite a lot of our competitors are actually geared into that market. So I think, look, as I said earlier, once the noise around, say, hopefully Russia, the shock of these interest rate hikes, inflation, etc. Well, that kind of we either get used to, or it dies down a bit. I think you'll see the ABS market opening again sooner than we think. I think it's hard to see it at the moment because it's closed, but I think certainly I'd see that market reopening. And I think maybe, look, I'm not a complete expert on ABS. I know we did one, but I think probably the product just has to be adjusted a bit to take into account obviously the higher cost of funds, etc. And then, look, I think in the interim, the lessors will look to their aviation banks as normal. I mean, you have obviously the traditional lenders. Then, of course, you have the alternative lenders that come into the market. So I think, look, while we definitely saw a slowdown in the debt markets in the first, the last 6 months, particularly around this whole Russian thing, I can probably predict that people get a bit more confident as time goes on and China opens, and I think that you'll probably see a kind of a more liquid market, certainly on the debt side, over the next kind of 12 months.
Yeah, I think that's logical. As you say, look, ABS, no one expected to bounce back as strongly as it did in 21. Sentiment turns quickly. And once we get that settlement on interest rates, you kind of hope we see a return there. And you kind of touched on some of the non-traditional lenders in the aviation market. Can I shift over on the investor side then, Fred, right? You mentioned obviously Carval have backed you strongly over the last number of years. Can you talk to us a little bit about your perspectives of the types of investors we've seen being attracted to aviation finance, and whether we've seen any kind of interesting trends on those coming or going from the space over the last couple of years?
It's interesting. I sometimes think of it like a football match. I mean, sometimes you players go on the pitch and sometimes players go off the pitch, right? And I think we've certainly seen quite a bit of that in the last year, whether it's Goshawk, ACMK, look, we bought Sarap, for example. So I think you're seeing, there's rumor about Alafco, etc. So I think you're seeing some people getting off the pitch, either through M&A or just getting out of the business. But equally, you're seeing new people coming into the market, like High Ridge, for example. You're definitely seeing, new players coming into it. I think it's certainly always of interest to big players to be in the aviation, whether it's for diversification reasons or whatever. But I think certainly, I think there'll always be activity and new players coming into the market, whether it's private equity, insurance, these type of players. Now, I think on the other hand, tax investors, I mean, like JOLs, JOLCOs, all that kind of stuff. I think you've probably seen that a few people got hurt in that, in the recent kind of downturn, or whether or COVID related stuff. So, and really particularly the Japanese, I think they're focusing on only like really top tier credits. So I think that market's definitely slowed down a bit, and it's only time will tell if it comes back.
And I suppose the competitive element then, interesting your thoughts around aircraft as an asset class and how that has evolved. I mean, pre-COVID, I think there was a clear maturing of aviation finance as a general asset class, and its attractiveness to lots of different types of investors, has taken, an outsized hit on COVID, an outsized hit on Russia, but on the flip side, shown an awful lot of resilience, both in aviation finance and the sector more generally. Your thoughts on how aircraft compare to other asset classes in attracting investors?
Look, I think, look, an aircraft, leasing deal in particular, it's relatively stable, predictable values, generally reasonably strong current yields and cash flows. Look, there's fairly controlled supply and demand. I mean, look, I don't know what exactly the number is, but there's only around 25,000 or a bit more actually commercial jets out there. So it's quite easy to sort of see, to get the controlled supply demand situation. Now, on the other hand, they're kind of illiquid compared to bonds and equity, but on the other hand, positive, it's a mobile asset compared to, say, a real estate deal. If something bombs in one sort of market, you can fly the plane to another market. So I think that's always been the case with aircraft leasing. But on the other hand, look, as you touched on earlier, like it is cyclical. We had the everything thrown at us in the last few years during COVID and the recent Russian situation. But I think it's a lot more resilient than it used to be. I can remember, I must be going back, I'm giving my age away here now, but going back 25 years. I mean, I think it was at the outbreak of the first Gulf War, there was, the top 10 lessors at the time, every one of them failed apart from ILFC. That included like the likes of GPA, Electra, etc. So, it's very interesting to see, having gone into this particular sort of COVID, etc. downturn, that literally no lessor failed, which I think is amazing. And it just shows how the model has adapted. You're probably seeing, certainly the top lessors and top 20, all have very strong shareholders in the background. And, they were able to withstand what was, if the same model was 20 years ago, that, you would have seen a massive amount of failure. So I think it's a very resilient model now these days, the lessor model.
And maybe keeping with that theme on the lessor model, Fred, we have seen an increase in the popularity of leasing post-COVID. We've seen the importance that lessors played in keeping a lot of airlines alive, right, from deferral arrangements, and working closely with their airline customers, in navigating solutions while we worked our way through the crisis. We've seen the 50% threshold breached on the leasing side. Your thoughts on, does that trend line continue? Over the medium term, it always has, but just interested, do you think it's continuing to go that way? And has the pandemic given rise to a kind of sustainable step change in the importance of the leasing channel?
Look, as I just said, look, it's been incredibly resilient, the lessor market. I mean, as I say, no failures through a particularly nasty downturn. So I think it's fundamental and growing for the, in terms of aircraft financing. As you said, it's over 50% today. And I think I can certainly see that trend continuing upwards towards the 60%. So, I think we're here to stay. I mean, when I joined GPA in 1985, the market was 3% lessors. So it's incredible that kind of, whatever it is, 30 years later, it's heading towards 60%. So it's absolutely critical part of financing for the next 25 years. I mean, I think, if I'm correct, I think somebody told me it's a $6 trillion market, between, growth and retirements for the amount of aircraft that's needed. So it's just an absolutely massive market. And as I say, look, if it's 60%, well, lessors are going to have to finance about $4 trillion worth of aircraft, which is hard to get your head around, really.
And your thoughts then just on that, on the space, you touched on some of the consolidation points, right, where we've seen, as you say, the AMCK acquisition, the Goshawk acquisition, some other things that are probably, in the rumor mill that may or may not happen over the coming months. Do you expect we'll see more consolidation? And you think that, if so, might be driven by the importance of scale? Scale is always important in any type of sector or business, but there's some thought out there that maybe scale is becoming even more important. And, on a platform like yourself who scales significantly, just interested in your thoughts on those two questions.
Look, I mean, clearly, the AerCap, acquisition of GCAS has put them like so far ahead of the next, behind them in terms of the top 10. So I think, as I mentioned earlier, you've seen Goshawk, I think that definitely I can see, more and more M&A in the sector. Possibly you could see the Chinese playing certainly less of a role outside of China. I mean, they used to be want to go around the world, but I think, you know, my kind of radar tells me that, you know, that the Chinese will probably kind of pull back a bit and concentrate more on their domestic sort of activities rather than, you know, trying to take over the world. So I think that I can see that happening. You know, if you're less than 100 aircraft fleet, you know, I could see, you know, you possibly merging with another similar size company or getting acquired. But I don't see at the very top, and i.e. the top 5, any kind of meaningful merger going forward. I think most of that big activities kind of happened.
Yeah, no,
Look, just you actually touched on like the, you know, the importance of scale now. I mean, that can be anything from negotiating with airlines, OEMs, etc. You know, getting, you know, economies of scale, and also things like bankruptcies and, you know, all that kind of stuff. I mean, look Russia, you know, 150 airplanes or thereabouts got caught up in that maelstrom, and you know, the lessors, you know, they've taken the write downs, but they've been able to kind of take the hit now, and we'll see how the insurance thing plays out over time. But I thought that was another very interesting kind of thing, that it didn't bring down, you know, any particular lessor, and again showing the resilience of the model these days.
Yeah, no, I think you're right, Fred. It does speak to, as you say, that theme of resilience, and again, like buffering the attractiveness of the sector, that it can take what would have been once in a generation hits that seem to be coming now with alarming regularity. Can we move a little bit onto the fleet side, Fred, right? To get your thoughts. You guys have grown the portfolio, as we talked about, very significantly over recent years. Can you talk to us about your thoughts on the assets you have sought to invest in and the thinking behind those assets?
Look, I guess there's 3 buckets that we kind of have in Aergo. You know, I think the biggest bucket is obviously the, you know, the narrow bodies, like obviously A320s, Maxes, NGs. So that's probably the biggest part of our portfolio. On the other hand, we've seen in the wide body space some interesting transactions. As I said earlier, we did an A380. We're up to like 14 A380s and 777s with Emirates. We've got A350s, 787s on long-term lease with Singapore Airlines. We've done quite a bit with IAG Group around the A330 product. So, you know, we're slightly, and then we reasonably sizable turboprop fleet. We've around, I think, 40 plus of the turboprops. And so I suppose we're fairly agnostic to aircraft type. We're very opportunistic. And, you know, I guess it's the same old kind of rules. We try and buy a good quality asset, you know, long kind of leases with decent credits, if you can achieve the holy grail around that. So we wouldn't be sort of, I mean, some of our competitors say, well, look, we're only buying 0 to 8-year-old aircraft, for example, whereas we just tend to look across the spectrum and essentially try and find value. I don't see us ever been having an order book or anything like that. I mean, we're not really set up for that. But so, you know, I guess it's like you could really kind of summarize Aergo as being very, you know, opportunistic, really. But again, look, going forward, as I say, we're edging towards 7 billion assets under management, owned or under management. So I just expect the kind of that trend to continue, but it'll be pretty much opportunistic. And I suppose the only thing I could say is that we'd like to think that there'll be larger deals. I mean, the good old days of doing onesie twosies, you know, with the growth expectations that we have from our shareholders now, I think we need to start, you know, doing essentially bigger deals to kind of keep it going and to kind of move the dial a bit in terms of growth.
And Fred, that probably brings us very naturally on to the trading market, right? You know, and having these conversations, you know, the view of some would be that we're in a kind of dysfunctional trading environment where, you know, we've had OEM delays that fed into probably some of the larger, you know, lessors being slower to divest, and therefore that kind of secondary market has just been a bit clogged. And then obviously the challenges with interest rates and pricing, you know, has thrown a bit more uncertainty in there. You guys have been very acquisition heavy over the last couple of years. Can I get your take on where the trading environment sits and where you'd like to see it evolve over the near term?
But I think it'd be fair to say that, you know, if you go look back to the start of the pandemic, I mean, there was so much activity pre-pandemic in terms of, things like lessors trading with each other and etc. But I think you could almost say for 2 years the market just nobody was trading because it was just such a very difficult environment. So I think that it's only in kind of recent, I would say, the last 6 to 9, certainly 2022 probably, you started seeing a reasonably active trading market. I mean, we do a hell of a lot in the kind of lessor to lessor type space. So I think that certainly is showing green shoots. I think that the other kind of, I suppose, call it trading, whatever you want, but like people selling aircraft into ABSs, that's kind of been dead. As I'd see that coming back, and therefore you'll see more trading into those type of structures. So I think that I can see definitely, like any decent lessor, not only do you have to sort of be buying stuff, but you also need to be selling stuff to make your numbers. So I think that certainly, the environment, I think over the next 18 months, we'll probably see a lot more trading compared to the last few years.
And Fred, then just to get your thoughts on asset values, because on the one hand, we're in an inflationary environment with demand for metal based off the kind of OEM challenges we've had and roll off of new aircraft. And on the counter to that, there's probably, lease encumbered assets in a heightened interest rate environment. Just very interested on your perspectives of how you've seen asset values move or not recently.
Look, I think, as we all know, the manufacturers, there's been kind of quite severe delays in that department. I think, secondly, I think, you're going to see, in fact, I think we're heading towards a shortage of aircraft over the coming years. I think, particularly as traffic comes roaring back, from places such as China. So I think that, interesting enough, intuitively, you would have thought, well, there might be a surplus of aircraft, but I think over the next 2 or 3 years, you're probably going to see a shortage. And therefore, I think values will go back up in aircraft, and I think lease rates will go up. So I think I could see a situation where fairly quickly asset values are going to recover quite substantially.
Yeah, no, I can follow that logic entirely, right? It can just quickly on OEMs, Fred, and I know it's not, and you guys haven't got an order book, and you've said it's not an area you particularly want to go down on, but just your thoughts around the relationship between lessors and OEMs more generally. Do you think they have, the lessors increased importance to OEMs, and while you mightn't do it, do you see more lessors trying to get down the route of an order book? I appreciate the challenges that are there given the current order books that are in place. Yeah.
Well, look, I mean, as we touched on earlier, we're kind of thinking 60% of the future production is going to be gobbled up by lessors. So it's absolutely critical, the relationship between the big lessors and maybe people with order books and the OEM. So I think, if anything, I think it's going to become even more critical, the relationship between the big OEMs and the lessors. But look, it's frustrating, I think, for a lot of, whether it's like we don't have an order book, but I mean, we've had, for example, aircraft in maintenance, or you buy a naked aircraft or whatever. It's just blowingly slow getting the planes back out because of supply chain issues. So it's really slowed down. For example, we bought those 20 Q400s out of Flybe, and it's taken a lot longer than we thought to get them fixed up, mainly due to kind of supply chain issues, as I mentioned, and secondly, getting people to work the production line. So it's a real problem, if you ask me. The whole, the supply of getting aircraft, back out up into the air because of these kind of, people and supply chain issues.
Yeah, and one that's probably gonna, like I mentioned your point on trading and hopefully it coming back in a real way this year. It's just going to be a challenge, isn't it? And one that we see continue. Fred, lots of great thoughts and insights there. Just in closing, as you're looking out over the rest of this year, what are your optimism levels like? We talked about lots of opportunities there, but still a significant degree of uncertainty and challenge. What are your optimism levels like looking out?
I think, look, I think, as I said earlier, I think we're probably heading out into a shortage of aircraft, so that should help lease rates and asset values. I think, look, China coming back into the fray, very important, particularly for the Asian market. I think the whole Russian-Ukrainian thing, I think, is a big elephant in the room. Who knows how that's going to go? But if I was to give you it out of 10, I'd say I'm a 7 out of 10 in terms of optimism.
I'm gonna assume that's on the high end, 7.
yeah, I would be.
Fred, listen, as always, I'd like to thank you for your insights, and on behalf of KPMG and Airline Economics, wish you and Aergo a very successful 2023.
Thank you very much, Joe. Appreciate it.